Okay, ladies and gentlemen, a new order placed to buy Canadian dollar at 131,116. Okay, order placed to buy Canadian dollar at 131. Let's do this. Yeah, just a little bit above of blue candle. Okay.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The same way that there was a push to re-regulate the banks after 2000 and 2007, you're seeing that now with tech. It's been the leadership sector. That's where the innovation is, and certainly it's forced the regulators to take an eye and look and see about monopoly pricing power. And so I don't think this is a blip.
Henry McVeigh there, KKR head of global asset allocation, on the latest regulatory push on the big names in Silicon Valley. From London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your market for this Wednesday morning. Equity futures just slightly negative in the last hour on the S&P 500. Down 4. We're off by 1/10%. Talked a lot about the bond market. Lift to yields again, up 2 basis points to about 0.81%. In foreign exchange, weaker dollar bleeding through G10 and against the Chinese currency as well. But the stock to watch, Netflix, down in the pre-market, Tom, by a little more than 5%.
Yeah, Netflix down as a tech derby starts here. Jason Bassinet joins us with Citigroup right now, and of course we'll get to Amazon and Prime Day and all that in a moment. Jason, does Netflix finally have competition in the streaming wars? Are they finally not the only streamer on the block?
Well, I think that's 100% true. I mean, the market is definitely heating up. I mean, we've got Tubi and Pluto and HBO Max and Peacock and Disney Plus. So, yeah, the market is definitely getting more crowded. Netflix was obviously a trailblazer and sort of showing everyone the way. But I think the traditional media companies have sort of woken up and are starting to pivot.
And, Jason, some of those companies have reclaimed the content as well. We've seen this play out now over a number of years, a number of quarters. What does that look like at Netflix at the moment?
What does it look like in terms of the content? Well,
for Netflix, in terms of how much they've got to spend on the content, how they replace it, what it means for the amount of subs, the subs they could be losing.
Yeah, so this is what's so interesting. I mean, Netflix has sort of trained the market like a bunch of Pavlovian dogs to react to better subscriber numbers, and those better subscriber numbers always require more and more spending. And, what happened during COVID is it was sort of this jolt to the market because suddenly you were getting a lot of net ads, right, without a lot of incremental content spending because production was shut down. So Netflix added in the first half of the year almost as many subs as they added in all of 19. And the market looked at that and said, oh, this is one of these, structural winners. It's a sea change, more streaming. And to the company's credit, they sort of told everyone, this is just a pull forward. We're just pulled a bunch of demand forward, and so it's going to be pretty soft. And the market was essentially betting against that. But that's actually what happened. I mean, the subs sort of came in softer. The trick for Netflix going forward, you know, from my perspective, is the strategic question for the CEO and the board is, how do we move from a model where we just spend a bunch of money on content and get subs but burn cash to actually demonstrating that this is a great business?
Jason,
go ahead.
Well, I was just going to say, I think that Netflix has its next hit on.
New position opened for Canadian dollar. That's a long position at 131.116. Okay.
That they brought forward a lot of the market share gains and that they cannot post the earnings and the profit gains that people have been expecting going forward.
Yeah, I think it very much depends on the company. I mean, there are going to be some companies where that's true and others where it's going to be less true. There's no sort of simple answer to that. It depends on the business model.
Jason, I want to shift to Amazon. There's two countervailing themes here. One is the huge success of Prime Day and how you extrapolate that into what a cardboard box makes for them. And the other is the cloud, all the upset at IBM over their competition, et cetera. How are your margin beliefs on Amazon, not only forward a quarter or two, but forward 5 years? Can they sustain margins across these disparate businesses?
Well, I don't think that it's about sustaining margins. I think you've hit on something that's sort of misunderstood on the buy side. Our view is that what Amazon is doing is sort of intentionally having, you know, selling products to consumers at very low margin, using that infrastructure to sell services to businesses at a profit. So what are those services? It's AWS, it's ads, it's commissions, it's fulfilled by Amazon. It's a very interesting strategy because it's not predicated on sort of making margins, you know, on e-commerce, on things. It's all about making margin on services. The market tends to go back and forth on Amazon. Sometimes they care about revenue growth. Sometimes they care about margins. We're definitely in the revenue part of the narrative right now. I'm sure it'll go back at some juncture in the future.
What is your sustained revenue view? Forget about a couple quarters out, 3, 4, 5 years.
Well, the interesting thing about Amazon is it's still, I mean, it is global, but really they've demonstrated the efficacy of this strategy of using this dual-purpose infrastructure, fulfillment centers, web traffic, servers, really in the United States. And so I think there's just probably a longer runway for Amazon than any other company that I cover, because it's very U.S.-centric, and they're just starting to roll this out at scale, you know, outside the United States.
Going forward, taking a look at the big tech rollout of third quarter earnings, who do you think will be most like Netflix in under-delivering the market's expectations?
Well, I think the kissing cousin are going to be the video game publishers. I mean, you know, during the lockdown phase, you saw a lot of in-game monetization, a lot of, you know, gaming going on. The companies were very similar to Netflix in that they cautioned that it was a pull forward. And similarly, the market, you know, so far hasn't really believed that.
Amazing. This market does not believe what is being told by these companies. Jason, great to catch up,
you
sir.
know, it's a bull market, right? Yeah.
Exactly. Jason Bazinet of Citigroup. I think Jason just nailed it there, Tom. When you're in a situation where the company's telling you something, literally spelling it out, and no one believes you, and you are there telling the investors that this is a pull forward, and yet still the stock gets bid up as aggressively it did. You heard it from the analyst just there. That's a bull market.
Well, you see, you know, not that I'm expert on Snap. I mean, I look at it socially and all that, but I look, John, at the Snap overnight, and again, it's just these tech juggernauts just continuing to extrapolate out. And you heard Mr. Bazinet there separate carefully from the mysteries of the income statement just up to the blunt instrument of revenue. And revenue solves
Lisa has
a lot of
Lisa's
problems.
got a list, Tom, of reasons to be bearish, and it sits there on her desk, and she just does this and just ticks every time someone comes on. Just another reason to be bearish, Lisa.
Well,
people not listening to the C-suite.
Yeah. This is just a bull market. People just completely ignoring facts. I mean, yes, this is a reason to be bearish. At the same time, the other side, the potential optimist out there, should she exist, would say, well, everything has to reprice up if yields remain low. So, you know, ultimately, I don't know. You can hear a lot of arguments out there that facts just don't matter anymore, John.
I love doing this. October 21st.
Oh, dear Lord.
Lisa Bravitz. People just ignoring facts.
I'm in triple leverage cash, so I'm just
Making a
taking
list.
it in.
looking for an entry point. I mean, there are a lot of
Just to do the
potential.
2020, I'm going to do the 2020 wrap and just put Lisa's greatest lines in it. Lisa's greatest hits.
Oh dear Lord!
At the end of the year.
Oh, I'm going to
October
be
21st,
absent.
people just ignoring facts. Alongside Lisa Brammitz and Tom Keane, I'm Jonathan Ferro. Here's the price action for you. Shaping up as follows on the S&P 500, 1 hour, 35 minutes away from the opening bell. Equity futures were positive, then they were negative, and they stay there. Now they're flat, down around about 2 points on the S&P 500. Elsewhere, in the bond market, yields up 3 basis points to 0.81%, and a story of foreign exchange. Euro dollar 118.50. It is a weaker dollar story. From London and New York, this is Bloomberg Surveillance.
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Pues, gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Live coverage of the final presidential debate Thursday at 8:30 p.m. Eastern Time here on Bloomberg Television and Radio.
people talk about a K-shaped recovery. It's absolutely true. Those at the bottom are having a very hard time.
It's not clear how exactly you get people out and spend the money and get the economy going.
The multi-year bear market in cyclicality is probably over.
The market is not as well prepared as it normally is for these kind of downside events.
Central banks and governments are in this together. They're one wallet.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. 13 days out to the election. We've got lots in this hour. Wendy Schiller, Brown University, will join us here on the changing political landscape. The polls tightening up by every single report. But in the markets, there is market movement today. We'll talk equities in a moment with James Bevan. I love his work on a more long-term perspective. John, let's go short-term. Where in the bond market, John Farrow, are you focused?
Long end, of course. Front end's anchored. Bit of a snooze tied to what the Fed's doing. 10-year yield starting to break out a little bit over the last 24 hours. Just north of 80 basis points. Level to keep in mind, in at around 95. That was the intraday high in the first week of June. We have not reclaimed that level. Still some distance off it. But that just plays into, whenever we see a price move like this, it's a bit more fuel for that reflation narrative. It's price first, narrative second.
I saw in five-year break-evens, just a little bit breaking out here to higher inflation. John, what is the significance of the vanilla spread, the difference between the 10-year and the 2-year yield, really back to March of 2018?
Steeper, and I think Lisa was right to pick on the 5-year versus the 30-year. That's steepened out as well. Look, for me, Tom, many people are just focused on the election and what happens in the next 2 weeks. I think we've got to get much more broader than that for this bond market. Talk to Steve Major of HSBC about this. How self-limiting would a Treasury market sell-off be, given how much debt we've just added on the corporate sector and in the official sector as well? Globally, not just in the United States, what's the tolerance of the global economy to higher interest rates right now, given the amount of debt we've added to these economies in the last 6 months? I would say that's diminished greatly. And what you would see in sovereign debt markets off the back of a sell-off is a very self-limiting one. That's the argument I think the likes of Steve Major and others would present.
Yeah, it's clearly evident as well in the currency market, where you wonder where a stronger euro really begins to impinge all of the continent. Lisa Abramowitz, what is high yield and corporate doing? My trap is I'm always full faith in credit. What do you see in the other part of the credit markets?
Everything's great, really good. Total flows in.
I'm placing stop on profit for Canadian dollar at 131.136. Yep. We'll have 200 pounds in profit if it will execute our position at this price. Okay.
By the other central banks to suppress yields, the more likely outcome is a lack of productivity, zombie companies, a change in the structural shift, and that's sort of what I'm looking at. That's where my pessimism is focused, just to set the record straight, Tom.
God, John,
I know.
John,
She's skeptical, but
is this why you went to
assets
London? I think this is why
money.
Farrow went to London, is Debbie Downer. We welcome all of you on Bloomberg
Debbie
Radio.
Realist.
Yeah, we welcome all of you on Bloomberg Radio and Bloomberg Television as well.
Moving up my stop on profit for Canadian dollar to 131.166. Okay, stop on profit placed at 131.166. Doesn't really matter what kind of how much you got per pip. As you can see, we have, because we professional traders, we trade others people money. We have spread quite tight, and we got 100 pounds per pip. When we trade, you can trade with 50 pounds per pip. You can trade with 10 pounds per pip. So in this case, for example, we'll have 500 pounds in profit. If you will have 10 pounds per pip, you will have 50 pounds in profit, just as you can see in few minutes. This is how this strategy works. Okay.
$, whereas the street looks for 190, and this is even before we put in the possible risk of Mr. Biden sweeping the presidency and Congress and applying a tax hike to corporations that might deduct $10 from those numbers. My rationale for backing equities right now is the risk premium, the forward-looking return for being in equities against other asset classes remains elevated. It's very high against cash and bonds, self-evidently, and I would say that equities are 2 standard deviations.
Moving further, my stop on profit for Canadian dollar to 131, just above, probably below the, what it will be here. That's great, 131, 186. Stop on profit placed, okay.
The consensus expectation is that Mr. Biden would be bullish for markets. Actually, I think that the most bullish would be some sort of gridlock in the U.S. political system, where, for example, if Mr. Biden were president, the Senate remained Republican, because that would mean that the political agenda would be much more muted, and it could be left to companies to do what they do best, which is trying to achieve strong long-term shareholder returns.
James, this is, again, counter consensus. The idea of gridlock, a lot of people point to as a tail risk, the idea that there won't be some sort of fiscal stimulus next year as people are pricing in with a blue wave. How are you taking advantage of what you perceive as mispricings in the market right now, based on this assumption that there will be a blue wave and that it will be positive for equities?
Well, I would say that there are some excellent long-term investment opportunities in the United States and globally, because if I'm right that the global economy gradually heals, I would say emerging markets are a fascinating play, in particular economies such as Korea, which have been sideswiped in terms of both investor sentiment and economic activity levels, and yet there are many companies capable of delivering strong long-term returns. I think that there are equally opportunities in Europe, and lots of people say, oh gosh, you can't go anywhere in Europe. Look, the Eurozone's in a mess, there's the Brexit risk. Why would we want to invest? Well, all of that bad news, I think, is in prices, and so I'm looking at companies like Schneider as entities that have excellent long-term credentials, and prices, in my view, simply don't discount the potential good news.
James Bevan, we just hit on Jason Bazinet, the wonderful analyst at Citigroup, and he was enthusiastic about revenue growth. We were talking of Amazon, but just of the revenue juggernauts. How does a conservative guy like you look at Amazon and Apple as value stocks, and particularly the crutch of going to the top of the income statement to justify ownership?
Tom, I would suggest that what we need to do is to think about the current free cash flow, the cost of equity, the return of equity, and the company's forward growth credentials. And I believe that in a climate of very low inflation, the prospects of low interest rates, and I certainly anticipate that the Federal Reserve is at some level engaged in yield curve control, meaning that they have the entire yield curve in sight rather than just cash rates, that we will see the valuation of the growing and dependable companies more highly rated than they are today. So I think that we can expect an expansion of the multiples of the more successful companies, the challenge then being trying to pick between the Amazons, who I do believe will deliver, and the Netflix, which I do think are overcooked.
Final question from me, James. There's a line from your research, your note. We think China has all the ingredients of a bubble that is yet to really start. Is it one you want to buy, and why do you think it's one that will begin?
I absolutely believe that in due course, the excess cash balances, particularly at the household level in China, will be deployed to the equity market. They will have a head of enthusiasm for the fast-growing stories. And I look at the credentials of a company like Alibaba as a fundamental business. I look at its global valuation relative to Amazon. And Alibaba, in my view, absolutely merits consideration in a global portfolio.
James Bevan, thank you, sir. Always great to catch up. Really fantastic. James Bevan there of CCLA on this equity market. Tom Keene, you heard it, over the next 12 months, he's looking for 3,800.
Yeah.
Earnings to disappoint. A lot of the heavy lifting to come from the multiple. But when it came to the politics there, he used the word risk. There wasn't happy talk around a blue wave.
Yeah, there
was talking about taxes.
A minimal amount of happy talk, but I did not hear a skeptical Bevan there. I mean, I feel, John, that, you know, part of the trap I'm in every day in booking is, you know, I go to our wonderful team and I say, I need more happy talk. I mean, can you get me some people that can deliver happy talk? And, you know, that's part of what we do here.
I'm leaving right now.
Is this to offset Lisa?
We are attempting but failing at offsetting Lisa at each and every moment, because happy talk is just, you know, Bevan was loaded there. Bazinet, happy talk on Amazon. Verone the other day on the charts, more happy talk.
Yeah, happy talk about, you know, Purina and Lysol. I can go there.
They're
Lisa,
showing good organic revenue growth.
It's important to understand the reaction function of market participants, Lisa, and the bias at the moment seems to be over the last several months to buy. And there seems to be an asymmetry around the news. If it's good news, great. If it's bad news, it'll get better. That seems to be the takeaway.
And the reality is they've been right, and they very well may continue to be right based on the backdrop of yields and based on the backdrop of the fiscal impulse. I'm not saying they're not. It's just there is a dissonance, as we heard from Joe Stiglitz yesterday, of Colombia, of the underlying economy and some of the pitfalls that we're seeing and what we're hearing out of companies, as well as some of the enthusiasm in the face of facts, like Netflix showed. That's all I'm saying. It's interesting.
Who used to write the gloom, doom, boom report? Who used to write that? Who used to do that? Well, who was that? I can't remember.
Joe Granville.
Lisa, that would be a great... Lisa,
Joe
that'd be
Granville.
Fantastic.
The late,
the
great
Abramovich
Joe
morning
Granville.
column.
He could. She could. I mean, there's no
All right.
question.
I would love that.
All right,
Are
I'll
we
roll in
doing
an hour
happy
earlier.
talk in the next section?
Tom Keene, Jonathan Ferro. I think this is happy talk.
It is.
It's like the odd bunch.
Joe
I don't know what
Granville.
this is.
Sounds about right.
Coming up, Wendy Schiller, Brown University Chair of Political Science. More fun to come. This is Bloomberg.
She's always happy.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin are moving closer to a deal on a new stimulus package. Pelosi hopes she can get an agreement this week. That's crucial to getting a bill passed by Election Day. One problem: Senate Republican leader Mitch McConnell is warning the White House against a Pelosi-led deal before November 3rd. He hasn't committed to a pre-election vote. President Donald Trump's campaign burned through almost half of its cash in September. The money shortfall comes at a time when the president remains behind Joe Biden in the polls. His campaign cut back on advertising in some key battleground states for a while. And British Prime Minister Boris Johnson will impose England's tightest coronavirus restrictions on Greater Manchester. Talks with local officials broke down, and Johnson warned that lives would be at risk if the government failed to act. The Prime Minister also left open the prospect of a national lockdown if infection rates keep climbing. And shares of Netflix are falling today. The streaming service missed Wall Street's estimates for subscribers. That renewed doubts about its ability to maintain growth. Netflix had warned that the pandemic-driven subscriber boom wouldn't last. In fact, the company said the surge in new customers could actually suppress growth in the future. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I have to move up my stop on profit for Canadian dollar to 131.216. Okay. Stop on profit, and let's see if it will get executed. Not yet. Okay, let's wait. Let's see.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We need to focus on the role of market power in our economy, the low wages, the fact that at the bottom wages are the same as they were 65 years ago, adjusted for inflation. And most importantly, we need the aggregate demand going up so that the economy, so that their jobs are there for all Americans. And that won't happen if we don't have that fiscal stimulus that Janet was talking about yesterday.
What a tremendous lineup of guests over the last couple of days. Professor Stiglitz following on from former Fed Chair Janet Yellen. Just brilliant. From London and New York this morning, good morning, alongside Tom Keene and Lisa Abramovich.
We close position on USD against Canadian dollar at 131.216. We have 1,000 pounds in profit.
1960, and that lift in the bond market up about 3 basis points on a 10-year, Tom. 81 basis points is your yield on a 10-year.
Yeah, worth watching all this, folks. The yen through 105 to a stronger yen, 104.84 gets my attention as well. This is a joy, particularly 13 days out in the middle of this historic election. Wendy Schiller is at Brown University and is too modest to mention that she is part of the new 5th edition of the Great Definitive Gateways to Democracy. It is without question the one-volume, 700-page, throw it at the kids and say, shut up and read a textbook on this American politics. And we're thrilled she could join us today from Brown. In the 5th edition, Wendy, or maybe in the 6th edition to come, you have to write about mail-in voting. What will you say?
Well, the world changed in 2020 for American elections, right? We have close to 83 million people have asked for mail-in ballots. It's about, at least 1/3 more than in previous elections. And they're returning them. And guess what? They're getting to the boards of elections. They're getting registered, they're getting verified, and they're getting counted. So the big crisis of that has not yet emerged in what we're seeing. And at least 37 million of those votes have already been cast, both in person and by mail. This changes everything about how we vote. vote. It will probably lead to a higher vote turnout this year and in subsequent years, and it makes for a more engaged public. From a business, educational, political standpoint, you want people to be engaged. If you don't want your tax dollars wasted, you want people to be engaged. If they can vote more easily, they'll be more engaged. So I think this is a big factor coming out of 2020.
Yeah, but one of the problems is you had a Brown PhD student a couple years ago who wrote 400 pages on Mayor Daley, 1960, and JFK stealing the election. How do we get away from that thinking?
Well, I mean, the thinking that people will steal it, I think that's a hard thing, right? That's been ingrained, as you well know, as you know your history, ever since we basically started with these sort of protected elections called the Australian ballot in about the 1880s. Everybody's been worried about that. But so far, you have a lot of county boards, both Republican and Democrat areas of the country, that are counting votes and aren't losing them yet. So we have to go through that. Now, whether you reject a ballot because the signature isn't right or something's wrong with it, that's really locally controlled. And that will be the point of contention if this turns out to be a close race.
Wendy, given the success of mail-in ballots, is there any talk about shifting to, I don't know, an electronic method of voting, considering that we are in 2020 and the world is digital?
Lisa, that's a great question, but I think there's still some big distrust about hacking, particularly since that's made a big focal point in terms of the Russian hacking, the Chinese hacking, American hacking. You know, thinking about hacking a machine, people are still worried about that. I don't know if American voters are interested in trusting that to the point of giving up this sort of ritual of filling out a ballot and handing it in and signing it and showing identification. I'm not sure anyone's willing to move there, you know, in the next